Hello, this section will cover cash transactions and in particular receipt transactions. Please turn to your new client handbook to page 42. Now, our last session was on purchase orders, and as I'd mentioned that purchase orders and adding vendors. And as I mentioned that we're going to camp out on that. We did spend a lot of time on purchase orders, and we're also going to spend a lot of time on receipts as well. So I want to encourage you to hang in there. The bulk of our time is spent on these common everyday transactions. When we get to some places in the software like accounting utilities and so forth, we're going to zoom through those a lot faster than some of the areas that we're covering right now. But we're intentionally focusing a lot of time on your purchase orders, receipts, and payments, because this is what your meat and potatoes operations throughout the week or the month. And so we want to make sure that you get a good handle of the software concepts surrounding those. So this section is no different. This will take a little while, but hang in there. We're going to start off with, in general, cash transactions and the key software concepts. So let's first start with the definition, working definition of cash transactions. Transactions that will increase or decrease cash balances in bank accounts, checking or investments, and or funds in the UAN software. So this could increase or decrease either your checking accounts or your investment accounts. And then here's a note. Concepts for non-cash transactions. Well, we already covered one of those. That was purchase orders. That's a non-cash transaction. That's more of a budgetary authorization transaction where you're encumbering amounts in your set aside in your budget for certain expenditures. So that's covered in the respective sections under purchase orders, which we just went over. And then under bank reconciliations, well, that has to do with balancing your cash with the bank, but the transaction itself of posting a bank reconciliation is not a cash transaction. It's more of, well, it's a reconciliation. And so we cover that briefly when we get to that point in the software. So to hit some of the concepts that we hit under payroll, they're slightly different. I won't read through this line by line, but I'd want to point out the differences. Currently, only the following transactions can be saved into batch in the UAN software. That's receipts and payments. Now, purchase orders and bank reconciliations as well can be saved into batch, but among your cash transactions, currently only receipts and payments. Now, a few years from, or a year and a half from now, when we update and you get the payroll system module, well, then that's going to add some others, cash transactions that can be saved to batch. So what we're talking about here, looks like I already went there in between the break. You go to accounting transactions, that's how you get to receipts. And here we can see an area where we have a batch area. And notice that I've already done some work on one batch receipt. It's got a batch number. Same thing for payments. We're going to kind of cover the concepts a little bit that cross over in the payments today and other transactions. I've got an area for my batch payments, just like we had batch purchase orders in the last session. But as far as for cash transactions, only receipts and payments go into batch. If it's another type of cash transaction, well, those are posted directly without this temporary state that we call batch. All right, so skipping down here to the definition of batch in the case of for cash transactions. In UEN, a receipt or a payment in batch is a transaction that has been saved in the software database but has not posted as a permanent record on the financial reports. Okay, so it's not going to show up on if you post a receipt. I mean, if you record a receipt and leave it in batch for instance this one, this would not show up on my my permanent reports, such as like the revenue status. The results of posting this $100 receipt would not show up on my revenue status. However, there are batch reports, and if I go to reports and statements, revenue reports or receipt reports, as you saw there, here's one of our big six reports, the revenue status, and it looks like the number of funds affected here. If I were to print this report, I could, let's see, no, I might have picked a bad one here. Revenue receipt ledger. No, that's not the one I'm thinking of. Let me go here to receipt reports. And here we can see, I have one report listed there. If I go to receipt listing or receipt detail, I can select the batch reports and filter by that, and that's the same receipt that I have currently in batch. So I'll leave that alone for right now. So back to our book. All right, so back to definition. A batch is a transaction that is saved in the software database but has not posted as a permanent record on the financial reports or posted to cache. So that's different. Purchase orders aren't posted to cache, they're encumbered. Well, they're posted and then encumbered when they're posted. Well, posted to cache, well, it says see below. And you can read the rest of this about batch transactions. But what does posted to cache mean? Well, first of all, all the things under, all these items listed below under either accounting transactions or accounting utilities can post to cache. And so here's the complete list, currently all the types of transactions that can post to cache. We're going to focus in on receipts and payments though. Well, a few things. How is a transaction posted to cache? Well, if it's a receipt or payment, it would be posted by selecting the item and clicking the Post Print button. In some of those other transactions, you might have a form and you might just have a Post button, and that would be a way to post to cache. When is a transaction posted to cache? Well, it's whenever you click that Post or Print item, regardless of the post date on the form. We'll see the different dates or the date listed or on the form. In the case of receipts, it'll be, or payments, it'll be the post date. What happens when a transaction is posted to cache? Good question. Cache is affected immediately, just like with purchase orders, that regardless of the post date, when you click that Post Print button, your cache on the calendar day that Post button is clicked, or the Post Print button, the cache will increase or decrease in the checking and or investment accounts, depending on the type of transaction. When relevant to the transaction type, the cash balance and the funds involved will increase or decrease accordingly. So your cash balance for those funds will increase or decrease, regardless of the post date. Whenever it'll be the calendar that you entered on the form, the calendar date that you click the Post button or the Post Print button. All right, reports are updated. Just like I said before, the transaction is recorded with the effect of the transaction on all applicable reports and becomes part of the permanent financial records entity. And then it prints the transaction document. For example, a receipt is printed, or a warrant, or it prints to a warrant. Excuse me. So here we've seen these before. The UN computer date and the calendar date are always the same. The transaction date on your reports is always going to be listed as the date that you clicked that Post or Print button, regardless of the dates that you entered on the particular form for those transactions. The post date on UAN reports will always will be listed as the date that you selected on the form or the post date on a particular form. And then here's a little note about receipts. Receipts require a post date and also 2 additional dates. We'll see that when we get to the beginning of the receipts chapter, which in fact we're going to jump to right now. So we'll come back to backdating and forward dating. So this is how you open up receipts. You go to Accounting, Transactions, Receipts. So this is how I got there: Accounting, Transactions, and then Receipts. That opens up the Receipts area. There's a lot of similar buttons. You've got the Add button for anything new that you want to add to batch. Edit the existing items, delete existing items that are in batch, display them, customer copy. There's a note about that and the highlights, and then that's just sort of an additional feature, and then the post print button, which we've already mentioned, that will post the batch receipts to cache. All right, there are 3 types of receipts. Now let's read the definition. A receipt is a document acknowledging the acceptance of a specific amount of money from a particular source distributed among one or more revenue accounts. So you're getting money and you deposit it at the bank, so you're receipting it into UAN, and you're determining, okay, what revenue accounts apply and where did this receipt come from? Where was the source of the revenue? All right, the following receipts types are available. There's 3 types. The standard receipt, well, standard receipt is standard. It's most of your receipts. They're used for typical receipts of money from any source. So your typical receipt, you would choose a standard type. And I'll skip to interest. The interest receipt is used for interest on investments or interest-bearing checking accounts. So when you earn interest, whether it's a checking account or investment, you would want to post that as, record it, add it, and post it as an interest type receipt. The screen looks a little bit different. You have some different choices when you choose interest receipt. All right, and then there's the memo receipt. Well, this is used for receipts from which memo charges are deducted. So in other words, you've got some revenue from a source of revenue, but memo charges are deducted. In other words, there were some fees taken off the top of that money. So I got a $100 check, but the person giving me the check, right? I earned $100 in revenue, not earned. I guess maybe you're owed $100 in revenue. You got $100 in revenue, but there were some fees automatically taken off, maybe $5 a fee. So my check was only for $95, but a memo receipt allows you to record that $100 of revenue minus the $5 in fees automatically. Examples of this would be tax settlements from your county auditor. It's a good common example of what type you would enter as a memo receipt, or pass-through revenues from projects like the Ohio Public Works Commission. Let's see, at least one revenue account as well as a source, receipt date, deposit date, and post date must be specified for all receipts. And a purpose must also be included for standard and memo receipts. Okay, well, let's look at what this looks like. If we click on the Add button, you get your 3 types of receipts: standard, memo, and interest. So we'll start with standard since that's the most common. Click opens up our Add receipt form, and here we have to specify a vendor. So on page 47, we're going to enter in that. Remember, we've talked about this all along. We got that donation in the Buckeye Township story beginning class, and so finally got that donation for $10,000 from Emmett Smith, and now we're going to deposit it. We deposited it at the bank, and now we're going to enter that into the UAN software. So our source, you can notice all the required fields here highlighted. Our source is who we got the money from, and that's Emmett Smith. Well, he's not on our list, of receipts. And notice this is a much smaller list. This comes from your vendor payee setup. But remember that available in checkbox? Well, we only have a few vendors that are listed as available in. So we don't have that source. It could be in there, but maybe we forgot to fill in that checkbox in the vendor payees. But I'll just tell you the truth. We don't have him set up in the vendor payees. You could go back and check that. Anyways, it's not required. Unlike the purchase order or payments, you don't have to enter in the vendor. Here, we can. You don't have to have it set up ahead of time. You can simply type in the name of the source of revenue. Excuse me. So I'll go ahead and I'll do that. And then you're also required to enter in a purpose. And we'll just say that's a donation. Also, I enter in some dates. I'm going to skip that for now. Let me just go down to receipt distribution. We'll come back to the other ones. We'll notice that we got our read-only fields here. Shows us the type, the standard receipt, and it gives us a total amount of the receipt, 0 at this time. So now we know it's a $10,000 receipt. Where are we going to distribute that $10,000? What revenue accounts? Well, we go here and we see that opens up to a drop-down menu. And in my book, I know that it's going to go to this 4952 Hayes Bequest Fund. So I can type that in, 4952. It narrows down my list of account codes. And I'll pick the 820. Again, this is from the chart of accounts, the revenue account codes. And so I can't edit this field. So I'll put in $9,000 on this account code. And then this one happens to be distributed among 2 account codes, so I'll select 4952. And there's 801, some donations. And we'll say 10,000, 1,000 of the 10 is going to be receipted using that account code. So now that's the check that I got, the $10,000 check. And it's not going to allow me to save this without entering in a date. Well, remember in the cash transact key concepts overview, it said with receipts, we've got 3 different dates that we have to select. Normally, with all the other transactions, you just have a post date, or it might be called date. You just have 1 date. With receipts, you have 3. So what are these about? Let's take a look at page 46. Your receipt, deposit, and post date. No, wrong. There we go. All right. These 3 dates are required always. It's the date. The receipt date is the date the receipt check was received by the entity. So it's when you got it, no matter what form. So if someone handed you a check, if someone it came in through the mail on that day, that's the receipt date. If it was a receipt that was an electronic transaction at the bank, you just got it automatically, that's going to be the date of the receipt. It's also going to match your deposit date. It will be the same if it's electronic. Now the deposit date, that's the date the receipt check was physically delivered and deposited at the bank, not at your entity, but at the bank. So if it's a handwritten check and someone mailed it to you or got it, your receipt date would be that date, and then the day you took it to the bank, it could be the same date, or maybe it was the next morning that you took it to the bank. If it's an electronic transaction, then again, that's going to match your receipt date. And then the post date, the date the receipt was or will be posted on the bank records. So if you think of your bank statement, this is going to be the date that's on that the bank says this is when we got the money, and when it effectively was increased the cash balance at the bank. This is also the date that will appear on UAN reports listed as the post date. Okay. You remember we said your transaction date on some reports might be different from your post date. because, as you can see, you can change the post date when we get there. If the post date is selected on or before the bank reconciliation as of date, then the receipt will be available to clear in the. Okay, well, we'll touch on that when we get to bank reconciliations. All right, there's a lot of notes under the highlights. You can backdate receipts, you can forward date receipts, note about investments and so forth. I'll leave that for you to read over. We might come back to that. I'll just say you can forward day receipts to 30 days in advance, and you can, yeah, I will mention these. You can backdate a receipt to the last bank reconciliation date. An example would be if used to use this as a if you received your bank statement and the actual posting date at the bank was a couple days prior than the current calendar date, then you could backdate that receipt. That would be okay. You can forward date up to 30 days, but you should be sure to follow the Ohio revised code regarding receipts, requiring receipts to be deposited within 24 hours. Well, let's get back to our exercise here. Theoretically, these three dates could be different, is one thing I want to point out. So possibly if I just look at the calendar here, I'll change this but for the exercise. But it's possible that you get a check through the mail and maybe you work a couple jobs, and so you're coming in later in the afternoon and evening and you get that check, and there's not enough time between the time the bank closes and the bank and when you get that check to deposit that check. Well, you got 24 hours for the receipts per Ohio law, so that's okay. You can deposit it on site. Let's say that comes in on Friday late afternoon, so that's your receipt date. So you get up Saturday morning and you take that check to the bank and deposit it at the bank. So that would be on the 3rd here. So that's your deposit date. And then your post date would be whenever that actually, you expect that to hit the bank records. Now, the bank policy is, well, they're open from 8 to 12 on Saturday, and if you bring it in after 11 and you came there after 11 or whatever, it doesn't actually update their records until the next Monday. So your post date is actually going to be different than these other two dates. So that would be on the 5th. So that would be one example where all three dates are going to be different. Now, probably in most cases, for your standard receipts for this kind of stuff, you get some checks in the mail and you go and deposit them. Most times that's going to be all on the same date. Your deposit date might be a day off or something, but they'll all be the same. I think that's what we have in our example. Yeah, they're all today's date. Okay, so that is the dates for receipts. We'll touch on that a little bit more later. But now I've got all of my required fields filled out. I could save this, and that would be okay. Notice the remember dates until form closes field. So that'll save these dates for me if I want to do any more standard receipts. So I could check that if I wanted to. And then the deposit ticket number. Well, this is a nice little extra feature. And we got some information on that. Each receipt posted on a particular deposit ticket will be grouped together on the bank reconciliation. So you'll be able to match the group deposit ticket total shown on the bank reconciliation form to the lump sum deposit amounts shown on your bank statements. So in other words, to keep it simple, let's say that you have two checks that you get to the mail, and one of them is for $700 and one of them is for $400. And you go to deposit those at the bank. The bank, well, it's a total of $1,100. When you get your bank statement and you look, we're going to get to our bank reconciliation, but when you get your bank reconciliation and you want to reconcile UAN with your bank statement, well, your bank doesn't care that it was two checks. It just is recording, as far as in most cases, that you deposited $1,100 on this particular day. So in UAN, though, you have those checks came from two different sources, let's say, and so you receipted them as two separate receipts, $700 and $400. So it makes it a little, with that example, it's not too hard, but let's say these are 5 checks amounting to $10,000 at all different amounts, $4,500 here, $199.47 here, etc. Matching that up with the $10,000 receipted at the bank in just one line on that date might be, a lot to match up on your bank reconciliation. This makes it a lot easier. As long as when you enter these receipts, you put in, I think we have an example here, deposit ticket number 2101. You put the same deposit ticket number in for each of those 2 receipts or 10 receipts that you deposited on that date. It will subtotal them as a lump sum on your bank reconciliation, so you can match up, oh, that was $10,000 at the bank statement and $10,000 in UAN, made up of all these different all of these separate checks. It makes it a lot easier. Now, I've heard from feedback from some folks. They say, well, my bank they don't give us a ticket number, so what do I do then? Well, the nice thing about this is you can type in whatever you want here. As long as they all match up, actually what I recommend is that you probably put in the particular, the date of the deposit, because usually you might only have one deposit for the day, and so you could put in, September 1st, and as long as you put that description in under the deposit ticket number for all 5 transactions, let's say, it will group them together on the bank reconciliation. So that's a nice little extra feature that you can use to make your bank rec easier. All right, so that's our exercise number 1. We're going to save this receipt. Now it's saved into batch. We can see the batch number there, and we remembered our dates, but I don't have any other standard receipts to enter examples, so I'll close this form. And then we'll go to add an interest receipt, exercise number 2. So we did a standard, now we're going to record an interest receipt. And exercise number 2, we have an interest receipt on one of our investments. And this is not an investment, we haven't seen that so far. Click on my drop-down menu. Well, I have a lot more information than we've done in class so far. I included some extra data here. So this is CD 4951, the UN bequest CD for $5,000. It's got a $5,000 balance, and we earned $10 of interest on that CD. Notice that the interest screen looks a bit different. First of all, the purpose field is no longer required. We've got a few extra buttons here, and we already have an account code listed in our receipt distribution list. Well, why is this? Well, this is driven by your investment setup. If I go back to my accounting maintenance screen, go to investments, look at my CD 4951, look at the display screen for that, or edit screen, I can see that this is a non-pooled investment. Remember that. This doesn't have multiple funds, just one fund. And since it only has one fund, that 4951 made up of that makes up that $5,000. You had to designate that $5,000 fund. It's not pooled. It's a non-pooled investment. Well, then it saves you some effort there. It pulls in the proper interest revenue account code into your field, into the distribution field. So really all we have to do here is enter in our $10. And that'll update, and we got our amounts, and we're distributing it to the right place. It shows you the fund. Remember, sometimes the fund doesn't always match up with the revenue count. Sometimes the revenue count that posts back to you might be different from the fund. So it lists both the fund and the account code. Now, if we're posting, notice this. Remember that receipt reinvest versus receipt to primary checking. Well, again, that's from our investment setup. It just sets the default. I can always change this. Also notice another unusual thing about this. In here, I can, because it's by default receipting to the primary checking account, I can change that so that it will post, well, maybe not on this one. Yes, it can. I can change that so that the interest will post back to the general fund. I have that choice because it's a conditional interest type fund type, and because I'm not reinvesting it. But notice what happens when I click on reinvest. Well, I don't believe it's going to let me post this, but it doesn't. Yeah, it doesn't give me a choice. I believe. I'll just save the dates here. If I try to save that, I get an error message. Amount must be greater than 0. Well, that's one thing. Fix that. Let me see if it gives me an error. Okay, good. That's the error that I'm looking for. Only revenue accounts in the Fund 4951 in Fund 4951. Whoops. Well, oh, there we go. May be selected when reinvesting this non-pooled investment. So it's not going to allow me to reinvest it because of that criteria set up in the fund maintenance screen. Remember the fund maintenance screen? It said that we determine that's where it determines whether your interest can post back to and being reinvested back to itself or to the general fund. Well, I guess I'll just go there under fund, their maintenance funds, go to UN bequest, we see that this must receive its own interest when it's reinvested. So I need to change that. Do it this way. Back to 4951. And if I look at my exercise, it actually is what we want to do. We want to reinvest that. Enter the dollar amount in again. And now it'll let me post this $10. I'm not going to post it yet because there's one other different thing about this exercise. I mentioned that you can backdate receipts. Well, there's not a whole lot of reason you would backdate receipts that I can think of. There are probably only a few good reasons. If you're doing your conversion, certain types of conversion methods from other accounting system to the UN system, well, then you can backdate. The other reason might be for electronic payments that you don't know about right away. So, for instance, you get your bank statement, and it shows that for this investment, 2 days ago, interest posted to the bank. Well, that truly did increase your cash balance 2 days ago. And in fact, the receipt date, the deposit date, and the post date were all the same. The bank automatically did it. It posted this $10. So that would be a legitimate reason for backdating receipts. So I'm going to backdate this to 2 days prior. My actual date is, September 1st, but these actually posted at the bank 2 days prior. Probably more realistic would be the end of the month, but that's all right. And like I said before, for all these transactions, you can backdate with the exception I didn't mention, and it's in your book, with the exception of printed warrants, which we'll get to that later, printed warrant payments, you can backdate all the way to the last bank reconciliation you posted. All right, but I'm going to backdate this receipt because it actually posted at the bank 2 days prior, to see in my bank statement, and I'm going to save it. And it allowed me to save it, and then I'm going to close this receipt screen. So I'm not going to add any other ones. All right, that brings us to, we'll look back here just a second. I'll just mention here, one note I had is that you can forward date receipts by up to 30 days, as I mentioned before. But just like, so here's forward date. You have the ability to forward date up to 30 days in advance. But just like with the purchase orders will encumber immediately, when you forward date a receipt or a payment, it will post to cash immediately. It will, for the case of receipts, it'll increase your cash balances immediately when you click on that post print button. So be aware of that. I can't think of a whole lot of reasons why you would forward date your receipt. It should be very rare since the Ohio Revised Code requires revenues to be deposited within 24 hours. One reason might be is that you're working again. You get the a check that day, but it's you're not able to deposit it at the bank in that day. Well, you could, if you don't want to go out to the place where you have your UAN computer, you could receipt that into UEN and forward date it, and then take it to the bank the next day, so still within 24 hours, and you can record it ahead of time. Instead of recording it in UAN after the fact, you could enter the receipt on, let's say it's a Wednesday, enter it in, forward date the receipt. You receive the money, receipt date of Wednesday, the deposit date was Thursday, and the post date was Thursday, so that would be a reason for forward dating. But other than that, there's not a whole lot of reasons for forward dating receipts. And I mentioned the investment setup is important for receipts. We'll see this. When you have multiple funds pulled and non-pulled investments must be accurately marked in the investment maintenance form, because that will impact, so this checkbox will impact how your interest receipts, the options that you have when you post your interest receipts. So I'll close that for now. And then we'll move on to exercise number 3. And that's our Star Ohio receipt. I'm just going to demonstrate a few things using that receipt. So here's a receipt I entered into batch earlier today. Actually, it's much earlier, but this is just our pretend Buckeye Township. All right, so if I look at that receipt, I've got my dates in here. I probably want to, now notice I entered this. This is a very old data that I pulled in here from February. We don't want to post this with backdated in February, so I'm going to change these dates to today. So that's kind of when you enter something in batch. You have to be careful if it's a couple days later, if you're just anticipating, well, we're going to get a check. They say their check's coming in the next couple days. If you just leave it as today's date and then you don't get that check, this does not automatically retain, updates your dates in batch by the calendar date. So you pay attention if you leave a receipt in batch that you check the dates before you go posting that receipt. All right, but the main point of showing you this screen, this is an example of a multi-fund or a pooled investment receipt. Our source is the Star Ohio investment, a $10,000 investment. If I go look at that investment, I can see it's a multiple funds pooled investment, and there's no funds specified here. So what it's going to do is going to pull in the interest, all the interest revenue accounts for the funds in which I have an interest revenue account set up or activated. It might pull in more than you need here, so you could click on the X, and actually that's what I did. I had about 5 interest revenue accounts listed, and I just clicked X and got rid of them. So it does that again as a convenience for issue of to help you out, and you can easily get rid of the ones that you don't need by clicking on the X in the corner, or you can type in directly in the field if you do need to use them. What I want to show you is another optional feature that is, for some clerks, fiscal officer is very convenient. Notice this checkbox, distribute proportionally by pooled fund balances. Well, for some type investments, fiscal officers have told me that they need to distribute this by the cash balances they have in their particular funds at the time that they get this revenue. And so you can use this. Notice what happens to this read-only field up here, this $100, when I click on that checkbox. And notice the amounts. We got 50, 25, 25. When I click on that, it opens up that field for me to modify it. So I could type in 0, and notice what happens here under amount. It zeroes everything out. If I type in 555, it's going to change these. And notice it's distributing it, those amounts, based on the funds. It's a lot easier when I see $100. Type in $100. You can see that it distributed it based on these funds, not the account codes, because notice Road and Bridge posts back to the general fund, but based on the fund amounts, it'll distribute that. And if we look at one of our key reports, the fund status, if I go to receipts, that's one of our shortcuts, is the fund reports. I can look at the fund status. I'm going to simplify it and just show these three funds. Yep, I picked the wrong one. Should be the UN bequest. When we look at our fund status, we can see how this plays in. I don't know if I'll be able to show you this now. Oops. Let's see, edit receipt. So notice the 69, if you round it a little bit, $69, $30, and just less than 22 cents there in these respective funds. If you look at my report, that's my percentage of total pooled for these funds, 69, 30, and then 22.22. So it's looking at this checking and pooled investment, all your pooled cash, and saying what percentage of your total pooled cash does that fund is made up, does that fund accounted for in that fund? And it's 69%, etc. So it's going to distribute that for you as of this point in time. Well, I didn't pick the most current date, but it is the same. I haven't done any additional information since then. But as of that point in time, it shows you that amount. So that's what the distribution is all about. It's a completely optional feature. Get out of this investment. Close this report. All right, so back to our screen here. So this is completely optional. If you want to just not select that and type in the amounts that you need, that's fine as well. But it's a nice little feature for those of you who could use something like that. All right, so I'll save that and close it. And then our last exercise is adding a memo receipt. We click on Add, select Memo. And this is a memo receipt from the county auditor. So this is this is a typical type of receipt. And for those of you who are new clerks, maybe existing entity, I've been told that by some clerks, sometimes they get this check. They might get a check for a certain amount, and they deposit that in the bank, but the county auditor doesn't send them a tax settlement sheet right away, showing them the charges that were taken off the top. And that can be a problem because you get a check for $90,000, but $10,000 were taken off the top. Your real revenue amount was $100,000. It's just that you had $10,000 in fees. So you have to be careful to get that. You want to deposit that within the required time by law, but receipting in UAN, you want to see if you can get that tax settlement sheet, or at least find out, or if you want to enter it as a standard one and then void it later and enter in the memo charge. But the ideal way is to enter, if fees are taken off the top of some revenue that you received, to enter it in as a memo receipt, because it will show your revenues and expenditures coming in and going out all in one step and affect your cash balances automatically. The thing that you don't want to do is, well, let's take a look at how this works, then I'll discuss the what to avoid. So we'll enter our source. The source is the county auditor. If I type in C, it narrows down my list, county auditor. And then the purpose is property tax. Our dates, we'll just make all of them today's date. So it just came in today. Most of this is the same. The receipt distribution is the same, works the same way, but notice you've got this other portion, the memo charges distribution. Well, that's your expenses that were taken off the top. Well, let's do our receipt portion first. I've really simplified this to just 2 account codes each. Often it's much more for some entities. So this is 1,000. This is property tax real estate. Again, I'm just throwing in some account codes. Makes the most sense for us in the Buckeye Township, maybe not for you. And then road and bridge, property tax there was $30,000 in actual revenue. Then I go to my memo charges, and this is a little bit different. The memo charges, you have to select the type first. Now, if these accounts that we're going to use required a purchase order, I would have to open a purchase order from the county auditor, made out to the county auditor, or a blanket certificate with those account codes. And so I would choose the blanket certificate or the purchase order from the list. So I'd select the type, and then I might have PO listed here, and I would do that. In our example, all the accounts, based on the chart of accounts, accept direct charges. So I don't need a PO or BC in this particular example. So I'll select direct, and then skips over this column here, and I'll just select the direct charge. This will list only my active account codes that accept direct charges. As you can see, it's a very short list in my sample. So here we want 1,110,314, and that's $500 charge, and then a direct charge from road and bridge, tax collection fees of $300. And then now, so I've distributed it to those account codes. Now, let's say this did require a purchase order or a blanket certificate. I could use this and enter in the BC, but I don't need that. Or I have an option to use what we call the import purchase order button. Now, I just want to point it out here because we're doing receipts first, but it's available, and it basically would copy your blanket certificate or purchase order information into this area. It saves you some time. I'm not going to show you that because we're going to show you that when we get to payments. It's also in your payment screen. So we'll talk about that later, but I just want you to be aware that it's there. And so if we look at our receipt status here, we've got our total receipts, our revenue of $90,000. Our total charges were $800. The check that we got in the mail, or maybe it was electronically deposited at the bank, our cash was only $889,200. So by recording this as a memo receipt, it records your cash accurately, records your receipts, your true revenue accurately, and your true expenditures accurately. What would be a mistake is if you get this check for $89,200, you deposit it in the bank for that amount. That shows your revenue, but what it does is it understates your revenue. You really got another $800 in revenue that you should record on your records. It also understates your expenditures. You really got $800. You got charged $800 in expenditures. So this takes care of both sides of the coin in one step. So I'm going to save this memo receipt. And oops, I got to get out of here. Here's a nice trick. I started to do this, the data entry field. You can't see this, but on your keyboard and it'll work on yours in the left-hand corner of the screen. By pressing the ESC or escape key, it will do it a couple times. Click on that, escape a couple times. It gets me out of that dilemma there, halfway entering something. All right, so that's the only difference. This section here is really the only difference between a standard receipt and a memo receipt, is the memo charge distribution. So I'm going to save that, and that saves my memo receipt. And so lastly now, if we look at exercise number 5, we've got a little add-on to the receipts section. Remember our Hayes bequest. Remember we have a zero balance in that fund because we're waiting to, we set up an investment. This fund is a permanent fund and requires a non-expendable balance. But we didn't have any money in the fund because we hadn't reseated that money. So now at this point, when we have a cash balance in our permanent fund, we can now set the non-expendable portion. So we'll go to Accounting Maintenance Fund and set that non-expendable portion, which should be $9,000 out of the $10,000 in our fund. So let's do that. So I'll go to, I'll just close this report now. I'll go to Accounting Maintenance Funds. We already have it open actually right here. And here's our Hayes Bequest Fund. So I'll select that and click on the Edit button. And I'm thinking, well, I should be able to enter the non-expendable balance, but look, I don't have a cash balance. What went wrong? Well, I did that on purpose, just to illustrate the point. Even though we entered those receipts, remember, we never actually posted them to cash. I'm not going to save that because when they're on, so if you see anything in here, this means it's in batch. It has not posted to cash. And so it hasn't affected, it hasn't become part of my permanent record so far. It hasn't increased or decreased my cash balances. None of that has occurred until I actually select the receipt or receipts. I could do one at a time if I wanted to. And click on the Post Print button. And at that time, it'll immediately increase my cash balances. Well, like I said, I could post them one at a time, or I could post all of them at once if I enter them all in batch. And again, I could delete these out if I wanted to, if I decided to start over. It's not part of my permanent records. Notice our estimated primary is $411,550. That will update once I post these. And if I printed a fund status report, it'll be updated there as well. So I'm going to go ahead and post this. Do I want to post all 4 items? Okay, yes I do. And when you post different types, whether it's a purchase order, a receipt, or a payment, when you have different types, it's going to bring up the different types of receipts in this case and show you and bring up a different print utility for each. So in here it's going to bring up my standard receipt, printing one standard receipt. Okay, so I only have one, so I'm going to print one here. So I click the print button. It's printing to my printer, and then I get another print utility, printing 2 interest receipts. So I can print those. Click the print button again. And then again, printing 1 memo receipt. So just be aware of that you're not going crazy. You did see those print screens, and it's for a reason. It prints them by type. And there's some programming reasons for that. It's especially, part of it has to do with the numbering of the receipts. It numbers them, and so it's going to print them all in order and keep track of your various receipts by receipt number. So it does that. Click on the print button. Obviously you can't see it, but it would be printing all my receipts to the printer at this point. Did everything print successfully? Same idea. If it didn't print successfully, it's already posted, but you can go and reprint them if you need to. I'm going to select yes, it did. Under Utilities, click on No, it'll open the Receipt Utility screen. I'm going to select yes, and it brings me back to this screen. Excuse me. And as you can see, I went from $411,000 to $510,850. So my cash immediately increased, and my fund cash, if I printed a fund status, would show that increase. If I go back to fund maintenance area and go to that Hayes bequest, go to edit that now, I can see that now I have $10,000 in Hayes bequest fund. So now I can finally enter my non-expendable balance, $9,000 for this fund. Save it. And again, this means if I try to post a check, pay a check out of the Hayes bequest fund for $9,001, the software will stop me from doing that because I would be exceeding the restricted amount of money. I could post a check for, if I try to post a check for $1,001, well, I've got $9,000 that's non-expendable. It's not going to let me cut into that amount that's legally restricted. So it's good for you to do that, and you're supposed to set that amount in the UN software to prevent you from making a mistake like that. All right, so I've saved it, and I believe I saved it. Let me double check. Saved it, and I can close the form now. And that is it for receipts. We'll now move on to actually investment transfers. Yes, investment transfers.